Hello, good evening, everybody, and Nate here. And I just want to take a few minutes tonight and share with you what futures trading is. Now, this is going to be the first lesson of an entire series of Futures 101. And I've got a few illustrative pictures over here on the left, and I'm just going to talk a little bit tonight, real shortly, about what futures trading is. Okay. Now, futures is one of the four different types of markets that you can trade: stocks, futures, forex, cryptocurrencies. So, futures, why futures? We'll get into that in a little bit, but it's very powerful to trade futures. And I just want to take and make this as simple as possible. Now, in the first couple of lessons, I'm going to be teaching a lot of topics that or words that you might be unfamiliar with. So please write them down, go back and look them up on the internet, and just make sure you can understand what what we're covering here. Okay, but once we get into actually trading, and once we actually get into the practical portion of futures trading, it's going to get a lot more exciting. Okay. But you got to learn, just like with anything else, you got to learn the nuts and bolts. You got to learn the lingo. You got to learn the terminology. Okay, so please take down notes, and I'll point out words that you're going to hear over and over again when you get into trading and what you'll hear in the industry. Okay, let's go ahead and get into this first lesson. Over on the right, I got where I'm reading from, and underneath my picture here, I've got some illustrations to kind of help illustrate what I'm talking about. Okay, so what is futures trading? Futures trading is basically buying and selling of standardized contracts, okay, contracts of different things that we'll talk about in a little bit what those items are, but contracts that obligate the holder to buy or sell an asset at a predetermined price on a future date. Okay. Futures are used mainly in financial markets for speculation, for hedging, and portfolio diversification. Now, those are really kind of collegiate level words, but I recommend you go out and do a little bit more, you know, do a little bit more homework on what is speculation, what is hedging, and what is portfolio diversification. That's why I've highlighted those words over in the text. Okay. So you can see down below in my illustration, we're doing a contract today to basically buy or sell an asset at a predetermined price for a future date. We'll actually get the delivery and the settlement will be in the future, but today we're buying it at a specific price. Okay, so that's basically what this is. Now, what I want to go over next is basically you know, um, what are futures? Just a second here. Okay, so what I want to do is cover what is traded in futures trading. Okay, so this is where we kind of talk about what those contracts are. Futures contracts exist in a wide range of assets. Okay, categories that you'll see when you start trading futures. Um, you'll see commodities. Now, what are commodities? Things like crude oil that sell on the global market. Gold. Gold is a commodity. It sells on the global market. Corn, natural gas. These are just some of the futures that we speculate, that we hedge with, that we use for portfolio diversification. All right. Now we're going to turn to financial products. There's also financial products that you can trade on. Okay. The stock indices. These are some of the things that you'll see us more will trade on a lot more here at NMKL Trader are a lot of the financial products. Now, some of those are the stock indices, the E-mini S&P 500 or the ES is a big one. All right. Also not listed, but the NQ, the NASDAQ 100. All right. We can also trade on the interest rates of Treasury notes. The U.S. 10-year Treasury note, the symbol ticker is ZN, and I'll talk about symbol tickers later on. We can also trade on the futures of currency pairs, the euro, the Great Britain pound, okay, the Aussie dollar, the Canadian dollar. There's a lot of different currency futures that we can trade on as well. If you've been a Forex trader before and you know a little bit about Forex, well, you also can trade on the futures of those currency pairs. All right, and last but not least, and we'll talk a little bit about Bitcoin and Ethereum. Ether there stands for Ethereum, but we can trade on the futures of those as well. Now, let me give you a real quick example here. Okay. Oil, for example, we listed it above, is an asset. Buying a crude oil future contract here in this particular example means you're agreeing to buy 1,000 barrels of oil set at a set price in the future, though most traders close out before delivery. Okay, so a lot of times we'll close it out as the price rises on it, or the price gets cheaper, depending on what we're buying or selling, will determine when we're going to close that contract. All right, trading is a little bit easier than that. You're not going to have to deal with people where you got to negotiate contracts and things of that nature, but this is the theory behind it. Okay, so just keep that in mind. Now, buying and selling future markets in futures. So basically, what we're going to do is when we're buying and selling, there are two types of transactions that we're going to do. We're either going to buy or go long if we expect the price of the asset to rise over here on the left. In other words, if we buy gold at $2,000, then we expect it to rise, we will sell it at a determined price once we get there, which in this case, in this illustration, they made $20 off of it and then they sold it. Okay. In the other example here, we can also sell or go short. Those terms are interchangeable. Okay. That's something to pick up here. When you expect the price to fall, we can make money going up and we can make money going down. That's the beauty of futures. Okay. Again, if we buy gold at $2,000 and we expect the price to rise, it goes up to $2,020, we get a profit of $20. If we expect gold to drop or to lower or go down, then we're going to sell. We're going to go short. And when we expect that price to fall, if we sell it at $2,000 and it goes down to $1,980, then we make $20 profit in that direction. Okay, so that's why I love trading futures. All right, let's talk about a couple of concepts here that we really don't need to cover too much with illustrations, but I'm going to provide this documentation to you so that you can go back and look at this along with the PowerPoint pictures, okay? Let's talk about liquidity and size of future markets for just a second. Liquidity is a term that you're going to hear a lot in the industry. Liquidity simply means how how quickly you can enter and exit trades without impacting the price, okay? In other words, the more traders that are in there, the more people are trading, then the more liquid it is. So it's very quick for us to get in and out of trades when there's so many traders around the world trading futures markets. That's why it's beautiful to use as an income, a source of income. Okay, so the most liquid markets that you're going to see us trading. Here's three of them, for example. The E-mini S&P 500. Yes, we will be teaching that at NMKL Trader. Crude oil. Sometimes we trade it. It's a little bit volatile. That's another term. But volatility sometimes causes these things in the market, and we'll talk about them as we get into advanced trading techniques. Okay. But crude oil and then the 10-year Treasury note. Now, these are just a few of the types of markets you're going to see us trading on. Now, here at NMKL Trader, the two that I'm going to really help you understand and get focused on is the S&P 500 and the NASDAQ 100, the NQ and the ES. Those are the ticker symbols for each one of those. So get used to those terms, okay? An example would be the ES futures often trade over 1 million contracts per day. That is a lot of contracts, offering tight spreads and fast execution. We'll talk about spreads in a little bit, but that fast execution is because of the liquidity in the market. Hold on just a second. Got to wet my whistle so I can talk some more. Okay, so how do we trade futures markets? Well, let's talk about that for a second because our follow-on videos are going to get into this. All right. To trade futures, you're simply going to need a trading account with a broker. All right. And we'll cover that more in detail in the next couple of videos. You're going to need a margin capital. In other words, you got to have money to be able to trade. All right. A trading platform with futures data, which we will teach you here at NMKL Trader. We use TradingView. We use their data and their charting platform. And you're going to need a strategy for entries, exits, and we're also going to teach risk control. Okay, these are all things that you will have to learn to be a good trader. At NMKL Trader, we have the strategy for you. We teach you how to enter, exit, and we will also talk about risk control. Now, when we get into account management, which is where risk control lies under, you're going to have to really develop discipline and be focused, okay? And listen to what we say and really become what we call a mechanical person. In other words, you're going to follow the rules. You don't follow the rules, a lot of times in this industry, you wind up blowing your account. Now, let me not be the bearer of bad news, but we have to learn some things, just like we do in any business, that keeps risk low. Okay? An example of how a futures trade works. Let's use crude oil, for example. Okay, trader buys one contract at $80. The price rises. Since he bought it, we're expecting it to go up. The price rises to $80.50. Okay, if you look at the profit, okay, equals 50 cents times 1,000 barrels, because one contract was 1,000 barrels, it equals $500. It's pretty cool. That's why there's leverage with futures, and that's why a lot of people that don't have a lot of capital, they have some, but not a lot that's normally needed to trade stocks, Forex, cryptocurrencies, and things of that nature. But with the leverage, we can get in with a smaller amount of capital investment and we can trade, which is awesome. All right. So, how do we trade futures markets? Let's talk about this for a second. Let me just go ahead and advance this slide over here. I want to see where we're at. We'll talk about this in just a few minutes, but I want to continue on number 2 here. How do we trade futures markets over here to the right? Trading futures is about understanding price movement, risk, and probability. We're not predicting. There's no way you can predict what's going to happen in the market. All right, how do we make money trading futures? You're going to make money by buying low and selling high, or by selling high and buying back low. That's kind of the formula there, okay? Now, I want you to write down the profit formula. You're going to need this, and I want you to memorize it. Okay, profit is going to equal exit price minus entry price, okay, times contract size per tick. Now, in the futures industry, you're going to hear us use how many ticks was that? Every point of movement for a futures contract is a tick. All right, let's look at an example here. Let's talk about the S&P 500, the ESE Mini. Okay, 1 point on there, 1 point equals $50. If you enter long at 5,000 and you exit at 5,005, profit is going to equal, because it only went up 5 points, but each point is worth $50. So your overall profit will be $250. Pretty cool, huh? That's why there's leverage. All right. Now, you're going to also be introduced to the question's going to come up, Nate, when am I going to buy or when am I going to sell in a futures market? Well, this is where you're going to have to learn, and this is why I built this NMKL trader community, is so that we can do this together. Traders use what we call technical analysis, support and resistance. We use trend lines, and we use a lot of different indicators. Now, I'm going to keep it simple. I'm going to teach you these topics, but what I don't want you to do is go out on YouTube and look at all the material out there. Here's why. There is a million different strategies out there, a million different ways to trade, and you only need a strategy, a single strategy that's going to help you win. Okay? Predict or determine the probability when a trade will go in your favor. All right? Because 30% of success in trading is only the strategy. 30% more is account management, and then the remaining 40% is the psychology of a trader, which we will cover in depth. Okay? So yes, technical analysis is a very, very intense thing that we'll learn. I don't want you to complicate it. I want you to make it simple. There's this acronym, keep it simple, silly. Okay? Let's not complicate things, because usually people who complex or make things complex or try to become too technical, they usually wind up taking longer to become profitable. And in a lot of cases, they wind up not even ever becoming profitable, getting frustrated and quitting trading. Okay. So we'll go through the technical analysis. I'll teach you very basic stuff to advanced stuff, but I don't want you to try to nickel and dime everything, or in English, a better way to say it is try to overanalyze. Okay. We will also talk about fundamental analysis on a very small scale. Okay, usually supply and demand, and then market news. Sometimes we'll listen to market news, but I don't want you trading on news, and I'll talk more about that in the course. We'll look at a country's GDP, inflation, interest rate decisions, OPEC announcements for oil. These are all things that come into play when we talk about fundamental analysis. And last but not least, we will be talking about market structure, breakouts, pullbacks, and momentum shifts. Now, again, these all sound very technical, but and we'll just keep them very simple, because my indicator that I've developed and our strategy does the work for you. Okay, so let's talk about an example here. Let's say gold breaks above what we call a major resistance level. What usually happens is traders may buy expecting that continuation of that breakout to continue in an upward trend. Okay. Now, what I want to talk about real quick is what is a tick, and I will get a little bit more specific here in futures. And I hope you're going through and writing down the terms that you don't know, that we'll be using over and over again in industry, picking them up. After this video, I want you to go online, do a little bit of research in Google. What does this word mean? Can you give me an example? AI is out there. Use AI. Okay. What I don't want you doing is going on YouTube and start looking at all the different indicators, different ways to trade, and things like that. That is going to wrap you up and it's going to overwhelm you. Okay, so stick to my training series, and what we're going to teach you from NMKL Trader Community. All right, so what is a tick in futures? A tick is the smallest price movement allowed for a futures contract. All right, now let's look at the examples over here on the right. For the ES, 0.25 points or a quarter of a point is considered a tick on the S&P 500 or the ES. Now for oil, it is 0.01, a penny in the U.S. economy. Okay, and then for the Treasury notes, it's 1/64th. All right. So this is just kind of showing you how these ticks actually work. Now we'll explain it. When we trade ES and NQ, those are mostly a quarter of a point, or it takes 4 ticks to equal 1 point. Okay. But let's talk about oil as an example here. And when I say oil, that's because the ticker symbol is CL. Okay. If oil moves from $80 to 80.5 or 0.05, $80.05, it's basically gone up 5 ticks. All right. If each tick, because it's a penny or 1 cent, if each tick is $10 and it went up 5 ticks, then use the formula. Profit equals 5 ticks times how much each tick is worth equals $50, and that is your profit. Okay. Sorry about that. My nose is starting to itch. All right, let's talk about what is a spread in futures trading. Now, when you have contracts, there's an ask and what we call a bid price. The bid price and the ask price are not always the same. It's basically the distance or the difference between the best buy and sell price. Okay. Now, what that usually equates to is the broker has a margin in there or a commission that they call a spread. That money is how the broker makes money. Okay. And it's the distance or the difference between the buy and sell price. They're slightly different. Now, when we get into trading view, I'll actually show you how to calculate that on the spread on the chart. You'll see it. Okay. But just keep in mind, it's kind of a fee that goes to the broker. They got to make money too. All right. So we'll talk about spreads a little bit. Um, you buy one future 1 month, you sell another. They use to reduce risk and margin. You'll see them. A lot of times on the ES, you'll see about a 0.25 to about a point 0.5 point or one or two ticks spread. Okay, so you have to pay that for every contract that you're trading. All right. So let's talk a little bit about what are the bid and ask prices. A bid price is the highest price a buyer will pay, and the ask price is the lowest price a seller will accept. All right. So if you let's use the ES for example, the bid price might be 5,000, and the ask price might be 5,000.25. All right. If you buy, you usually buy the ask price. All right. If you sell, you usually sell the bid price. All right. Just keep that in mind. Now, also, when we talk about bid and ask price, I kind of went over that a little bit just so you get familiar with it. Sometimes we'll talk about those when we're trying to figure out our journals and things of that nature. Yes, we journal our trades. You thought accounting in college was a painful class to take. Well, we actually keep journals, not accounting journals, but we keep blotters of our trades. So it's what we call accounts management. All right. So let's also talk about the different types of orders that you're going to see in futures trading. All right. There's a market order. It's simply when you buy or sell a commodity or a futures product immediately. You enter the market right away. All right. Then there's the limit order. You buy or sell at a specific price or better. In other words, you might go in and place what we call an order in the market and wait for price to pull back to you or price to move in your direction. Okay, these are used for strategies in trading. There are stop orders. These are triggered once price crosses a specific level. Okay, again, we'll use those too. I do buy stops and sell stops. Sometimes I'll do limit orders where I'll have price pull back to a certain point and then I'll get into the trade even though I expect it to rise. Okay, so I get a better price. We have stop limit orders. This combines stops plus limit. We have bracket orders, includes target plus stop losses, which we will not get into that much. Also, we have a type of order called one cancels the other. It's an exit plan. And these are just types of orders that we'll use in market futures trading. I just want you to be familiar with the terminology so that as we talk about them, really the ones you'll hear me talk about are the market orders. You'll hear me talk about buy and sell stops mainly. The other stuff, once in a while, you'll hear one cancels the other if you're doing stop losses, things of that nature. Okay, but let's just go through an example here. Place a bracket, entry long at 4,000. Let's say your target is 4,010. Your stop loss is 3,995. So we will set bracket orders as we trade. I don't call them that. I usually say, I call them, did you set your take profit order? Did you set your stop loss? And those are synonymous with bracket orders. All right. Now, one thing I want to let me go on through here a little bit. I didn't show all my video stuff here, but you can go back and look through the PowerPoint for illustrative purposes. But I want to talk just a few minutes before we get out of here about the need for a demo account. Okay. Simulation account, demo account, or virtual trading. Now, if you were to take money right now and fund in an account and you started losing your very first trade, you're going to go into an emotional overload. You're going to be like, wow, why is this going against me? All right. But here's what a demo account allows you to do. It may take longer time to start making money, but it allows you to practice a strategy as you learn. So while we're going through this course, I'm going to set you up with a demo account and teach you how to trade on it. So you have strategy, you're learning, and you're building confidence. That way, when you do get over into the live account and start trading real money, you don't look like this guy on the left. You've practiced to come out and win. All right. That is the beauty of having a demo account. So, why should you demo your way to success? It's essential for beginners. The benefits are you learn the platform that you're going to be trading on without risking real money. You test the strategy that you're going to be using and learning, and you're going to build confidence with it. Because one of the things that I want to teach you to do is very simple. You're going to have to detach the emotional stress that comes with losing a trade. Most traders do not overcome that. Okay, that's why you hear only 5% of anybody who starts trading will become profitable. All right. Now, let's not let that become you. Let's listen to what we teach and let's apply those principles. Okay. So that's why we have a demo account. It also, you can learn order execution and market behavior with it. That's why it's awesome. A trader practices a trend following strategy in demo for 3 months before going live. So that's why I'm going to tell you, please practice for 3 to 6 months before you consider going live. All right. Now, last but not least, and I want to kind of cover this, can you get rich trading futures? All right. First of all, I want to state this right here. You need to understand that trading is not a get rich quick scheme, because you can lose money just as quick as you can make money at it. Okay. Now, their answer to this is yes, but it's rare and it's going to require that you build a skill, you develop risk management, you become disciplined, gain experience with a proven strategy that we're going to teach you here at NMKL Trader Community. Okay. So many traders are going to lose money in the short term. All right. I want you to think about this. And those who succeed have all went through what we're going to go through. All right. What you're going to want to do is think long term. Don't think you're going to make money super quick and be, on top of the world. You have to think long term, because what we're going to do is we're going to manage risk very tightly, 1 to 2% per trade of your account size. Okay. And you're going to learn to control your emotions. You do this to where trading becomes wash, rinse, and repeat. It may become boring, but then you detach your emotions from the trades when you do lose them. We're going to set a daily target of profit, okay? And if we hit that daily target, we're going to stop trading for the day. We're also going to have a daily profit target of loss. So if we go back the other way, we lose a certain amount, we're going to stop trading for the day. We are going to set limits as we teach you to trade. I'm here to teach you to trade successful, not just a strategy, but the mindset, the account management, and the risk management skills that will make you successful if followed. Okay? We're going to continuously practice and improve. There is no team that has never won the Super Bowl in football unless they continuously practice throughout the entire season and improve, improve, improve. Okay, a trader growing from 100 or from $10,000 to $100,000 may take years of refinement and discipline training. It all depends on you. Some make it faster than others. All right, but from this lesson, here are the key takeaways I want you to realize. Futures are leveraged. Liquid markets offering profit in both directions. You can buy or you can sell. The market can be going up, you can make money. The market can be going down and you can make money. It's that simple. Now, if you try to overthink that, how are you making money if the market's going down? Well, it's because it's futures. All right, it's directional. Success requires discipline, skill, and consistent practice. Understanding ticks, spreads, we'll even talk about margins and order types is essential. It's going to be part of the strategy. All right. The demo trading is going to build the foundation for real world success. And riches are possible, but discipline, not luck, is what makes it happen. My last illustration, if you ever met a medical professional, the doctors who are specialists, they focus on one area of medicine. They become practitioners in that area, like a heart surgeon, okay, or a research specialist. When they become a um, a doctor with what's the word I'm looking for? A specialist, okay, a specialized type of medicine. That's the doctors that get paid the most. They simply do one thing, and they wash, rinse, and repeat what they do. A general practitioner, jack of all trades, master of none, doesn't make as much as a specialist do. Here's what we're going to do in trading. We're going to learn to master one strategy. We're going to learn to wash, rinse, and repeat it. We're going to become disciplined, focused, and we're going to mitigate risk by detaching our emotions from trading. You're going to develop the skills so that that last line down there, riches are possible, but discipline, not luck, is what it takes to make it happen. All right. Now, I know that I've went through a lot of stuff here, and I may sound a little bit, dry and pragmatic, but I have to get this information across to you before we really start trading. So we're going to have all kinds of fun trading. Trust me, it's not going to be like this every lesson, but I really want you to just kind of relax, take some of the terms that I went over in this first lesson tonight, and I want you to go back and look up the terms because we're going to use them in the industry. All right. This is Nate at NMKL Trader Community. I hope this has been a very good lesson for you, and I'll see you in the next one. Take care.